We have a thought leadership partner in Standard Bank, and the women with whom we work, Silgabusa, Kadleho Maleke, have said to us, why don't we do something around the gender lens investing? And let's look at the surprising role that stock exchanges around the world are playing in advocating for women in senior positions. And so that's what has led to the next panel. We have a fantastic moderator. We have Lerato Mbele, who is with BBC World News, who's going to moderate this panel. Before she starts, we're going to have some words from Anne Alaker, a woman who's the head of investment banking, international investment banking at Standard Bank, who I'm sure could talk about all the things that we are speaking about on this throughout this discussion today. And then we are joined by four fabulous people who are going to help us unpack this. We're going to start with Mayowa Kuyoro, who is a partner in the West African Financial Institutions practice at McKinsey. And McKinsey has done some fantastic research looking at Black women, particularly in the senior executive roles and boards in Africa. And so she's going to share some of the insights from that research with us. And then we're going to hear from Susan Keating, who's the CEO of WomenCorporateDirectors worldwide. She's going to talk to us about what the NASDAQ has done in the United States in terms of making as a listing requirement that women must be on boards. We're going to hear from Temi, Popola, the Chief Executive Officer of the Nigerian Stock Exchange, who's going to talk about what Nigeria is doing. And we're going to hear from Nyembezi, the Chair of the Johannesburg Stock Exchange, who's going to talk to us about where the JSE is. Anne, I'm going to turn it over to you to give us some opening remarks. Anne Alaker, Head of Investment Banking, Standard Bank.
So I prepared some words and I read a little bit about Professor Mayowa's work, and I thought that was very inspiring. But listening to the last panel, the conversation was authentic, it was refreshing, and I think leads us so nicely into some of the practical hows of how we can increase women at a very senior level, particularly on the exchanges in Africa. Some of the things that Professor Mayowa spoke about, the women talks about, really resonated with me. The concept of resilience, the reference to being the only one in the room, people looking like you, the representation all of those women have for all of us, I think is quite important. And the work we will be doing together, I think, is fundamental and quite foundational. So I'm really delighted that Standard Bank, we partnered with Africa.com, and really pleased to hear the next panel. So Standard Bank Africa is very much our home. We drive for growth. And we truly believe that in order to do so, that it's important we play our part in ensuring that women and girls enjoy the same rights and access as men and boys. Because this isn't just a fundamental right, but it's a business imperative. Economic empowerment, participation of women at a very senior level. When I look around the tables at which I sit, I'm often very much the only woman, and I'm more particularly the only Black woman at these tables. And so I think the activist roles that the stock exchanges will be playing, we'll talk about, is quite important. Because in the corporate world, we have to develop targets and practices that make gender diversity, equality, and parity actually real. At Standard Bank, we're seeing how we do this internally for our staff and how we create enabling environments that are free from bias. And I did hear the panelists talking very much about bias. Practices that will enable us to advance and exceed and enable women to succeed based on the merits and ability. So in Standard Bank, we've done quite a lot, and we've shifted the tone within the organization and quite significantly shifted the number of senior women in executive positions. But it's been slow, it's been arduous. Change feels as though it takes much longer than we'd all like it to be. At the moment, about 35% of our board is women, up from 20% in 2018. We have a target towards 40% by 2023. And there's a lot of confidence that we'll meet it. But being within the bank, I can feel sometimes how difficult it is to actually get there. So our internal approach to this is very necessary. when it comes to women in the asset management world, and specifically for that, we are supporting women across Africa, and we've registered a foundation to support the Africa Women Fund Initiative, which was launched in partnership with the United Nations, and it's aimed at uplifting female-led asset management firms and promoting sustainable growth across the continent. This is important. You may know that on the continent, only about 5% of women fund managers women, and only about 7% of all private capital is invested in women-owned businesses. This is material. And through the African Women Impact Fund, we intend to raise 1 billion over the next 10 years for these fund managers to invest in high-impact businesses across the continent. I think I'd just like to end by saying that the last 15 years in the group, I've seen Standard Bank move, perhaps not rapidly, towards more consistent implementation of various strategies to achieve gender parity. But as with many companies, progress takes place in fits and starts. I'm excited to listen to this next panel, excited to learn about some of the practices that they are implementing and seeing what we can adopt, certainly within investment banking, to achieve gender equity and gender parity. Thank you very much, Teresa. I'd like to hand over to yourself and to Lerato.
Thank you, Anne, and thank you to our panelists for joining. Let me just start off with a few of my own interventions, if I may. As an outsider from the financial services and business world, just my own observations. I'm going to present a few names to you. Many of you will recognize them, but let's just see how many you do recognize. If I say to you Kamala Harris, Jacinda Ardern, Dr. Ngozi Okonjo-Iweala, Sana Murin, when we talk about Rose Raponda, these are all women who in the last 2 years have either been elected or re-elected as presidents, vice presidents, heads of international organizations, and prime ministers in their countries. Now, I'm mentioning this because it seems as though we are starting to see some kind of a trend globally where voters are making a decision and using their elective rights to choose women to lead them. And not just to choose women, but to choose them during a truly unprecedented time in world history, a time where we all know how society and global economies have been affected by the COVID-19 pandemic. The choice is that women can lead through these crises. So my question is, this trend that we're starting to see, as nominal as it may be in politics, can it permeate other areas of society? In the last few years, the conversation around gender pay parity has come to a head in elite sports like tennis and also football, where we haven't been discussing issues of gender. We're also seeing a trend in Denmark and Ireland, for instance, where younger leaders are being elected and even leaders of a different sexual orientation. So it's not even just gender and gender pay parity issues, but it's also diversity issues and questions of minority rights. So I don't think it's an accident that this year, as a culmination of work that's being done, the NASDAQ has introduced new listing rules and requirements that would take cognizance of the need for gendered perspectives and also the need for diversity interventions in investing. And this is why the conversation we're having here today is so forward-thinking, it's so timely. And I hope that as we discuss the role that stock exchanges can play in being activists for women leadership, but also changing the prism of the lens in which investors deploy capital, I pray and I hope it is a useful one for all of us. So without further ado, I am now going to hand over to one of our panelists. She is going to be talking us through some research that's been conducted by McKinsey over the last couple of years, I suppose, work that has been looking at the impact and the trends for women leadership and also for diversity and how it pertains to the world and indeed to the African continent. So Mayowa, Kuyoro, over to you.
Good afternoon, everybody. It's a pleasure to be with you all this afternoon on this topic, which is very dear to my heart, which is around sort of gender parity. And I really like this lens that we're looking at it, because we don't, as Lerato has mentioned and some of the speakers mentioned previously, we don't see a lot of women in the investing world. So it's great to be amongst such great company this afternoon. What I'm going to do, as Lerato said, is just share a little bit of perspective that we've built over the last 4 or 5 years around what the gender parity situation is in Africa. As a firm, McKinsey in 2017 launched this piece of research that looks at what gender parity would mean for economic outcomes. So we tracked in 2017, I got 2017, sort of what that looked like. And then we refreshed the research about 2 years ago to say, look, let's see what progress we've made. And we did a specific one focused in Africa. So the first report was global. We then decided to do one for Africa, and the next refresh is going to be due next year. So this is based off of 2019 data. What you see on the chart is sort of a landscape across the continent around what a gender parity score is. And I'll explain to you what it is in a minute. But you can see that you have what I call the South African cluster of leaders, where you have, even at best across the continent, medium inequality. At worst, you have some of the West African countries that have quite extremely high inequality, and the rest of the continent sort of flutters around the high inequality space. And the gender parity index is essentially a composite looking at gender outcomes on 2 dimensions. The first one is equality at work. And here we have a number of metrics that we track as to check how women, sort of what women's outcomes are. And then we have equality in society, looking at things around health, access to education, and so on and so forth. On the top right-hand corner, you have the leaders, and as I talked about previously, it's the South African clusters, where you have sort of relatively, and I use the word relative, right, relatively higher, just relative to the rest of the continent, relatively higher outcomes on work and in society. On the left-hand side, you have what I would term as workplace-focused countries, where you have better outcomes for women in terms of parity at work than you do in society. And then the rest of the countries are sort of split into 2 clusters, where there is sort of very bad outcomes for women, both at work and in society, and then the countries that are sort of middle of the road, where they're not really distinctive anywhere. And we built an econometric model to say, if in the best in region scenario, if we had a situation where all of Africa was sort of equal in parity, what would it mean for GDP? Because people react to numbers, right? And one of the things that this research sort of says, it's not, it's not doing good, it's not doing well to really think about gender parity. It's doing good. And it has sort of broader economic implications for us. And I think there are 3 key messages that I would strike here. One is that, by 2025, and we did this research a little bit before COVID sort of struck, so the numbers might have changed slightly since then, but there is an incremental sort of opportunity of $300 billion to Africa's GDP, which is not insignificant, right? But the second thing that I think we should also think about is, if we carry on at our current pace, and like I mentioned, we've done this research over 2 periods of years, it would take 140 years to reach even that 300 billion number at the current pace. And 140 years is essentially 7 generations, right? So this is, if we continue at the pace, and I love some of the examples that Lerato gave, but those are sort of singular examples. We need to hear more. We need to have more of those sort of examples, and we need to get more traction for us to begin to move the needle across both equality at work and in society. And this is not just an Africa story, by the way. This is something that is a global phenomenon, right? We looked at, like I said, we did the work in 2015, and we did work again in 2019. And if you look at equality at work across all the regions, you can see that actually, when you look at it vis-a-vis both years, we'd actually, as a world, sort of regressed slightly. There were some regions that did better than most, but there were some regions where you had sort of slight reversals in the progress that had been made previously. So the average parity score in gender equality at work was 0.52, which isn't a lot. It was 0.01% increase, which is not a lot. We're talking about decimal points to measure increase to parity. So there's still some work to be done. And now let me talk about Africa and gender inequality at work in Africa. I would just focus your attention on the first two columns. The first column is world average, and the second column is Africa. And, if you take a step back and look at it, we largely mirror sort of global performance at work, right? So there are two things that I always talk about. One is unpaid care work, and then the second is leadership positions. And this is why we're here. And when you look at it across the world, there's still extremely high inequality, right? In leadership positions for women. So there's still, for me, this message is, yes, we're sort of at par in Africa with the rest of the world, but on metrics that matter, on metrics that show the progression, we're still quite behind. And we really need, it's not enough to talk about it. It's not enough to write. We need severe action. We need a lot of action to change the narrative that we have. But there is some good news, right? It's not all doom and gloom. There is some good news. Africa still has above world average representation in top leadership roles. But I always say, please take this cautiously, because we're still not celebrating 50-50, right? We're celebrating 25%, we're celebrating 22%, right? Which is great that we're higher than the rest of the world. However, we're not talking about 50-50. Parity is 50-50, and that's what we should be striving towards. And this is driven primarily by sub-Saharan Africa. So the progress or the leadership position that Africa has made in terms of board and sort of executive committee representation is driven primarily by sort of SSA. And then the other thing that you will see on the final chart is really around executive committee roles. Again, you have the Southern African region really sort of pushing ahead there at around 24%. When you do the research here, and I think this is another thing that I care a lot about, is that when you look at women's roles in executive committees, they tend to have what I would call line positions, as opposed to business positions where they're holding P&L and again driving things like investment decisions. So I think we need to celebrate, and I think that's why we have this page here, but we also need to take that into context so that we're not talking about 50-50 representation, we're not talking about roles that really help to drive business outcomes. So what can we do to change this? And a lot of what the previous panelists talked about is actually captured here. I think the first thing that I would talk about is investing in human capital. So making sure that we actually invest in education and raising the skills to ensure that we have women who are who have the right capacity to drive the outcomes we want to see. I think the second thing is really around creating economic opportunities and ensuring that, for example, in our places of work, we have formal mentorship and sponsorship programs for women. There was a question asked about feedback and so on and so forth. You can only grow if someone tells you where you need to grow. So I think there needs to be some formal mentorship programs there. The third is really around leveraging technology, which we all know about. I think the fourth one is particularly important in the context we live in Africa, which is around shaping attitudes, right? And then finally, enforcing laws, policies, and regulations. You'd be surprised as to how many of our countries actually have laws that are female friendly, but are just there written and nobody really applies it. So thank you very much. I'll hand over back to Lerato now.
Numbers don't lie, they say. And I think the minute you said it would take 7 generations to effect meaningful change that would contribute more than $300 billion in the economy, for me, that's when the penny dropped. That's what we're really talking about. But thank you for the measured insights as well, where sub-Saharan Africa is making strides at board and oversight levels. Okay, let's get a perspective now from the United States. And by way of introducing to you our next panelist, I just want to read a short excerpt from the Securities and Exchange Commission in the United States when they were doing the work that led to the new rules to be introduced this year. So a year ago, the Securities and Exchange Commission said the new listing requirements would require all companies listed on the NASDAQ to publicly disclose consistent, transparent diversity statistics regarding their board of directors. Additionally, the rules would require most NASDAQ-listed companies to have or to explain why they do not have at least 2 diverse directors, including one who self-identifies as female and one who self-identifies as either an underrepresented minority or a member of the LGBTQI community. And then for foreign companies and smaller companies, the reporting standards are more flexible. Now, I'm reading you this just for us to crystallize what is required here when we're talking about investing from a gender perspective and looking and incorporating diversity into the investment agenda. And so by that introduction, I'd now like to hand over to Susan Keating, who is the Chief Executive Officer of the Women Corporate Directors Foundation, just to share some insights from the United States, and also, Susan, for you to tell us how companies have responded to these listing requirements. Over to you.
Well, first of all, thank you so much, and Lerato, and thank you, Mayowa, for that just really very comprehensive research report. I want to just say in the US, McKinsey has been very influential in shaping awareness and opportunities for more diversity on board. So thank you for that. I am Susan Keating, and with Women Corporate Directors, and just to level set here, we are a global organization. We are 20 years old. We have 2,400 women that are part of 76 chapters around the world that today serve on public company or large private company boards. So that's sort of who we are. And to your point, Lerato, NASDAQ has done an extraordinary job of really helping to take a stance that can potentially accelerate sort of where we're headed and basically support what we're all talking about here, which is more diversity, both gender, ethnicity, sexual orientation, and so forth on boards. And perhaps to kind of frame this, I'd like to say that in the US, as in many other countries, we continue to see a growing recognition of the value of board diversity. And that sort of growing kind of position is what has led to requirements such as the position NASDAQ has taken, intended to define diversity, but also increase it. We were talking earlier in the panel about the fact that this has really been a slow process of seeing progress in Africa. The same is true in the US. And again, what I would say many of us talk about our progress, even though we have made progress, it has been at a glacial speed. So let me first say that a decade ago, the Alliance for Board Diversity, which is a coalition of groups advocating for diversity, conducted a census that said that companies were really underrepresented in women and minorities, at that point representing only 25% of all Fortune 500 board seats. Also, growing research demonstrated, and again, McKinsey and others, the benefits of diversity, which resulted in companies being urged to really enhance shareholder value by promoting. So this gets back to that point of awareness and sort of engaging companies to think differently about how they are addressing diversity. If we look at the investors, they actually began putting buying and voting power behind diversity. And then also with ETFs or exchange traded funds, a database was developed which tracks ETF board diversity, as does impact assets. So again, another point here, and I really am sort of getting to, we have seen an evolution. Over the past 15 years, shareholders have stepped up. So different stakeholders have come at this topic from a variety of places, but shareholders stepped up, proposed resolutions in support of diversity. So today, the number of women and minorities on boards has doubled from 2011 at 44%. So again, this has been slow. However, moving at what many of us would say, again, as I said earlier, at glacial speed. Separate from that, in the US, we've had Congress, we've had the SEC, who has approved NASDAQ's proposal. We've had the New York Stock Exchange, and I'll speak to that in a minute, that has supported and tried to advance diversity. We've had state laws and requirements. All of this has created an active focus that has been very helpful. Just recently, You certainly are aware that in the US, we've had a lot of racial unrest, particularly following the death of George Floyd. And I would say that really marked a turning point in the long journey to confronting racial and social justice in the US. And so today, companies are rethinking the composition of boards, the C-suites, the workforces. And again, you could see from the McKinsey numbers that the US is doing better than most in those categories. But also nominating and governance committees are more intentional about seeking diverse qualified candidates. So NASDAQ is an active champion. And again, this gets back to the point in September 2020, it supported what was called the Board Challenge, where they were asking boards, this was more awareness, they were asking the boards without a Black director to add at least one in the next 12 months. Then in 2020, they actually announced the proposal that you so kindly referred to. And again, the point was to advance diversity and enhance transparency through new proposed listing requirements. Now, the rule, which was subject to certain exceptions, would require, again, just as you suggested, at least one woman, one person of color, or identified as LGBTQ over a period of time. And as a part of this, if companies did not meet those requirements, they had to explain why. Also, there was instituted new reporting disclosure requirements. And again, in August of 2021, the proposal was approved with some amendments. And again, NASDAQ's goal was to provide a better understanding of companies' current board composition and enhance investor confidence that all listed companies are considering diversity in the context of selecting directors. So again, the rule requires companies to disclose formally and through a board diversity index. And again, I'm pleased to say this has been well received in the US. It has certainly gotten serious attention on the part of companies who are rethinking their board composition and their commitment to diversity. And again, along with NASDAQ, the New York Stock Exchange, actually, even though they have not taken the same position that NASDAQ has, they, some years ago, actually created an initiative to advance diversity through their advisory council, which is more around awareness. They have 21 council members that are very vocal, such as David Solomon of Goldman Sachs and others. So that, along with, again, US Congress has taken positions, states in the US have taken positions, and we see a movement here that we think should be very helpful in our intention of increasing the number of diverse candidates on boards, not only in the US, but worldwide.
Right, Susan, thank you so much for a comprehensive presentation. And what I garnered from what you said is there are the rules that are being introduced, but prior to the rules, there was a lot of sort of intuitive, deliberate action that was being taken within corporates in America to start to realign or change perspective. So I have one question to what you've said, which is, what can be done to introduce softer targets, perhaps, that can help companies continue to move in this direction, give it a little bit more momentum? And how do you measure meaningful change? Because it's one thing to meet requirements because it is what the regulator wants. It's another thing to just have change because you know it's the right thing to do.
So I would say it really starts at the top. And that's why with Women Corporate Directors, we are very focused on the boardroom. And if we don't have board members and CEOs in the C-suite taking leadership positions, recognizing the opportunity that diversity represents in these companies, from our perspective, it's kind of a losing game here. And again, one of the things, to your point, Lerato, is not only do we have to embed in our strategic work on boards our plans for supporting and increasing, enhancing diversity, but we have to hold everyone accountable. There have to be true measures of determining what defines success and track that and report it. And I would say, you know, it's interesting, not one size doesn't fit all. I mean, companies need to reflect their stakeholders. And given the diversity of stakeholders today, it is absolutely critical that we have new and different thinking at the top. And I'm going to go back. You mentioned the pandemic and what that has done. We've talked about the pandemic in terms of the, but what that has done in having leaders think differently about their companies. The silver lining here has been most companies are having to transform themselves. There are so many factors coming into play that boards, you have to have diverse thinking to address how best to approach and ensure that these companies survive longer term.
Okay, thank you for that. I'm now going to turn our attention for a more granular perspective of South Africa, which has the largest stock exchange on the African continent. But may I urge you as delegates and participants to keep this conversation going via your social media platforms and use the @Africa_.com. And I guess let's just make it a hashtag, Women in Leadership. Let's start talking about meaningful change. And now I'd like to introduce to you the chair of the JSE, the Johannesburg Stock Exchange, Nonkululeko Nyembezi, who's going to just give us a picture of what the trends are like here in South Africa in particular, and the work that's being done by the JSE, both as the regulator, and the JSE is also a company in itself. So, Nku, in terms of the work and the incentives that can be introduced to encourage companies that are listed to be a little bit more deliberate about appointing women at the highest echelons, what's happening?
Thanks, Lerato, and good afternoon, everyone who's joined the summit. Wonderful to be here. So let me just start by taking a step back and just say for the JSE, this has been a journey that has been ongoing for quite a number of years. We introduced governance requirements as part of our listing requirements, actually as one of the very first exchanges in the world to do so for various reasons that are perhaps not important to go into right now. So our market participants became accustomed to not only reporting to stakeholders on financial metrics, but on what has become now ESG. Although I have to say in those days, G was the big issue because clearly as an exchange, transparency, integrity, all of those things, investor protection is what you're trying to go for. So it's been an evolution. And so the second point I would make is that one of the reasons I think this whole diversity transformation is so difficult is because culture is a whole society change. It cannot be undertaken at a level of a company, a level of a sector, or indeed even so private sector versus public sector, as you said at the start. It needs to be a whole society endeavor, and therefore it takes time. So in South Africa, given the post-apartheid landscape and government's own efforts to implement a transformation through BEE, through employment equity, JSE could actually tap into some of that to move the part of the ecosystem that we could influence in that direction. So having had companies report on these metrics to the Employment Equity Commission, we could simply then insist that if a company wishes to be listed on our market, they had to adopt a board policy on diversity, and in particular be clear about the targets for race and for gender that they commit to their own board. We are not prescriptive about the targets that they must meet. We just want them to publish them. And from that moment on an ongoing basis, to report back to their shareholders and the wider stakeholder base how they are performing against those metrics. Ultimately, this is a push. And I mean, Mayowa said something really critically important from our perspective. This is a push towards parity. While I personally support quotas, I have seen them work. European exchanges are simply the most representative from a gender perspective since quotas were introduced there. The danger with a quota is that very quickly it becomes a maximum. So people have ticked, I've got my 30%, I'm done. That's just a start. Where we want to be getting to is parity. So in my mind, how you choose, or the instruments you choose to get there, are perhaps not as important as being just dogged, deliberate, and persevering about how you move the entire ecosystem towards that ultimate goal. So in our minds, where we are today, in this very, very recent Sustainable Stock Exchanges benchmark report, JSE was placed in the top half of performance above median globally, with 28.5% of all board seats on the exchange occupied by women. But certainly first in Africa, as Mayowa's numbers also showed, that we simply are at the top in Africa. But I have to stress that it has taken time for us to get here. And in my experience, and you can see the hair, that there has to be quite a bit of experience, change is not linear, right? It happens slowly, and then one day you blink and everything has changed. So question actually that would be really good to hear from the researchers amongst us like Mayowa is, do they think we are close to the tipping point? Because I don't think we're just going to see incrementally every year until we get to 50. I think we will tip over and start to see far more rapid change. And it feels to me that we may not be too far from that. So net, because we as a company have a woman chairman, we have a woman CEO, we have a woman CFO, we have a woman who runs our post-trade services, and we have very recently appointed a woman as our COO. It then starts to crowd in female talent, female skills. People have psychological safety to do what they need to do and to lead in a way that resonates with their deepest beliefs, and they don't have to present in any kind of masculine fashion in order to be taken seriously. And that is just, I suppose, our own bubble within the exchange. But I do have to say my successor next year is a man, so it doesn't always go one way. So diversity goes both ways, right? So, so I think it's been, for me, quite a joy to see how we have made strides, at least within JSE Limited, in the time that I've been chairman in this journey. And I know it can be done. It just means somebody out there must care enough, must sponsor, must ask, must probe, must push.
Okay, I haven't finished with you yet. I just want Mayowa to answer your question. Are we near the tipping point?
When you look at, I was actually surprised when I did the research in 2019, because I actually thought that, given all the narrative and all the conversations that had been happening around sort of parity, that the outcomes would be better than what I saw. I think at an aggregate level, perhaps not, but there's some, what I didn't say, and I think we don't do enough of, I'm a consultant, I always look at what's wrong, but what I didn't do enough of is celebrating what I term as bright stars of the continent, right? So there are some countries where actually over the last couple of years, we've seen some significant movements, in terms of gender participation, both in the workplace, but also in society. And I love what Uncle said about it's a societal, it's a systemic change. It's not just the private sector, it's not just, the public sector, it's everywhere that has to happen. So I think in certain respects, we are seeing some of that. But I think that, from a continent-wide perspective, given, the varied outcomes across the countries, we're not quite there yet.
Okay, thank you for that. Nku, I want to come back to you, Nonkululeko, Nyembezi, and you used the term, it's about being dogged in implementing the change. Now, South Africa has a particular context. We don't have to go into it, but because of democracy and what it meant, there needed to be affirmative action targets, there needed to be gender targets, there needed to be Black ownership targets. And with that, we've seen quite dynamic shareholder activism, certainly on issues around race in business transformation. What can stakeholders do within their individual companies, just drawing on that kind of history, to say, in as much as we were dogged about changing the complexion of leadership in corporates, we now need to change and introduce diversity, both in a gendered way and also in the diversity that we've spoken about earlier on?
Well, it always actually starts with the few leaders and what they do. I mean, I also serve on the board of Standard Bank, so the speaker that came just before talking about what Standard Bank is doing in the gender area is just one example of the kind of thing you're talking about. And very recently, we said, well, with 25% now, women on the board, is it time to push? So there is certainly no shortage of the lead companies starting to pick up gender in a more serious way. And I have to say they're not enough, but even with race, when we started, it was the Standard Banks of the world, the GSCs of the world that were leading the charge there. I do think that in South Africa, though, to be fair to corporates here, there has been a lot more drawing in of women in just the recent past than we've seen for a long, long time. What tends to stand in the way is you get a woman getting an executive role, let's say a CEO, and when she leaves, there's just no bench strength to replace that person as they leave. So I think even without necessarily going for the top roles, where corporates should be measured is anytime there is a position that's being interviewed for, is there a woman candidate? And if we could just push just on that, because that's almost the first step to always going to present this women candidate. Typically, when you give women that chance, they'll do the rest. So nobody's asking to be mollycoddled. They're just asking to be given an opportunity to be heard, to be considered. And so I think if you take the lens down a level and say, is that starting to happen in middle management and perhaps in senior management in organizations, you might not be as pessimistic about the future as we are when we look at the CEO, particularly of the publicly listed company CEOs. So I think the whole point is all of us, wherever we go, if we just insist, okay, you've got a short list, who's your woman candidate, that can start to create the momentum that you're talking about.
I'd like to introduce you now to Temi Popoola, who is the Chief Executive of the Nigerian Stock Exchange. Temi, I'm going to say you're the carnation amongst the roses, and thank you so much for being here. Now, Nigeria is a fascinating country, so dynamic, so diverse. It's also Africa's leading economy. I know that the NSC has been undergoing a huge transformation over the last 10 years with the demutualization. Now that you're walking into a new era, what are some of the things and the work and the incentives and the rules that can be introduced to really raise the mantle when it comes to women's issues and women's leadership in Nigeria and in the Nigerian economy?
Great. Thank you very much for the question. It is a pleasure to be here, surrounded by women. That's not lost on me. But yes, indeed, we have just gone through this corporate restructuring at the exchange. And one of the things that it does for us is what I call flexibility, really across the enterprise, to really address issues like this. If you look across our institution, for example, we have a company, a regulation business that directly supports the exchange. That's run by women, has very strong board representation, for example, about 65% women. I say that really because for us, we like to start first from ourselves and really to ask how we look to address this subject. As an institution, we're engaged in several partnerships. For example, we have a partnership with the IFC, the Nigeria to Equal program, where we really look to try to address three things. One is how we can drive women participation in the labor force, how we can drive entrepreneurship for women, and then of course around governance with women representation. When I listened to Mayowa's presentation earlier on, I do agree. The data that we have also from some of this work that we do does suggest, in line with global sort of benchmarks, this 25, 27% sort of boardroom representation, particularly among the top 30 stocks listed on our exchange. Away from that, of course, as I said, it's not lost on us that some of the strongest proponents and voices and perhaps levers that could help drive this are exchanges, similar to the NASDAQ initiative that has been discussed earlier. So directly addressing your question, what are we doing? What do we think exchanges can do? It's interesting to note that quite a few exchanges actually already do quite a bit of work, and quite a few institutions also using exchanges or using the markets addressing this. You might know, for example, of the FTSE Women on Boards Leadership Index series. There's a Bloomberg Gender Equality Index, for example. There's an IDB Invest Gender Focused Social Bond as well. What do we think exchanges can be doing globally? We think that, for example, in line with some of these initiatives by NASDAQ, there could be more engagement of regulators to encourage listed companies to report on diversity metrics. Of course, it's important for me to say that in markets such like ours, where listings are few and far between, just cyclically where we are, I think it's understandable how we can't go to what I'll call the extremes on this subject. But there could be baby steps like this, getting our corporates to report on the diversity metrics. There could also be requirements from applicants actually to disclose, material convictions or judgments against them that violate, gender and social related issues. Or perhaps, indeed, one of the things that we are thinking about is offering a separate listing segment that screens for gender metrics as the world increasingly looks to explore this point. I think finally what I would say is that for us, yes, indeed, there's a lot of rhetoric around this subject. But it certainly is more than rhetoric for us. It's something we take very seriously, all the way from our hiring policies to governance and to some of the social efforts that we support. Thank you.
Temi, we're going to stay with you, and I'm really glad you mentioned that there's the possibility of creating a smaller exchange where gender-focused initiatives can be looked at. So my question to you is, from the work that you've done, has it been found that gender-focused funds, bonds, that sort of thing, those instruments, that they do have a material impact? And just by way of answering, also just be aware that Nonkululeko's got something she'd like to add.
So why don't I let her go first, if that's fine?
I'm quite relaxed about that. Thank you so much, Temi. Just on the point that you made, in South Africa very recently, actually as recently as August, one of the passive investment companies launched an ETF, and they have introduced to that ETF a diversity score. So they have 4 things that they look at, and based on that, they will give you a diversity score. So, for example, we are now thinking of going to them and saying, can you also add just the gender one? And if a company scores well on that, they get even a higher diversity score, so that investors out there, retail or institutional, that want that kind of exposure know that this is an ETF to support. And we've seen this with the climate focused and sustainability focused funds that have come to the market. They've had a huge amount of support from the public. So your point about exchanges can work with the ecosystem within which they operate to start to create products for this kind of investment, I think would be a really huge support to women asset managers, entrepreneurs, women who are looking for capital of that nature.
Actually, a lot of the research does support this. There's a very popular piece of work done by McKinsey, actually. It shows that boards that have higher women representation, for example, have a 30% higher chances of just performing better. It speaks to companies run by women. They tend to be run better. And I think also if we just look in our, call it maybe perhaps anecdotal lives as evidence, there are certain strengths and skills, frankly speaking, that, women bring to the table. So I think that the argument certainly has gone past whether this is the right thing to do. It is the right thing to do. And frankly speaking, again, if I look at our country, Nigeria, it's something the government even takes very seriously. We have the Central Bank of Nigeria, for example, sort of mandates to financial institutions for at least 40% female representation on their boards. It's quite a strong statement and policy to have. And this is the way, frankly, that we view it. Thank you.
And Mayowa, I have a question for you, and it's a little bit of a curveball, so just bear with me, but it was just prompted by the introduction that Anne Alika made earlier on. So a lot of the conversation we're having here is obviously looking at capital markets and companies listed publicly. What are the trends in private companies? What are the trends when we're looking at startups and the work that's being done by venture capital and other kinds of investments? Because just last year, I'm looking at a report from Brighter Bridge and First Check. The largest proportion of money coming into startups came to Africa last year, $3 billion. But only $21 million went into women-owned businesses. So there's somewhat of a disconnect. And I'd just like to know softer targets that can be introduced in this area of business that's harder to monitor. But what would your recommendations be?
No, I'm actually not surprised at all. So we did something similar. We looked at Nigeria. We looked at I call this my nighttime job. In my daytime job with financial services, I looked at in 2019, 2020, a list of 200 of the top fintechs in Nigeria, and looked at the funding. And if I ask you to guess how many top fintechs have either a female co-founder or were funded, you'd be surprised at the number. I think at the beginning of 2020, I think the number was 3 out of 200. So it is absolutely dire when you look at the situation in some of these industries. Look, the way I think about it is you don't get what you don't measure for. So similar to what Nku said about quotas and targets, where you saw targets and quotas being put in, you saw sort of remarkable change. So in Temi talks about the CBN in Nigeria. I can give other examples. In South Africa, for example, what happens in politics when you have 50% representation of your ministers? That's because someone has said it has to happen. You have the same in Rwanda. You have the same in some countries such as Senegal. So unless someone says this is what needs to be done, we actually don't see the needle moving significantly. I think there's a balance that needs to be made between sort of quotas and people filling in just because they want to meet the quota versus putting the right candidates therein. But even then, and I know this might not be the popular thing to say, this is my own personal opinion, right? Does it really matter, right? Does it really matter to a certain? We need to get we're coming from such a low base. We need to even the playing field a little bit. And I think one of the ways to do that is really ensuring that there is right laws, right targets, and so on. But also there's a mindset shift, right? There's an absolute mindset shift around sort of gender parity. And it's, again, for me, I keep saying it's not enough to talk about it. It's not enough to have conversations amongst women. I think someone said a little bit earlier that the predominance of decision makers are men. So we need to have more men in the conversations. And we just really need to begin to make, to convert conversation to action. And that's one of the reasons I do the research I do. I think we need enough facts to have sort of fact-based advocacy around these issues.
Thank you so much for your contributions and for answering my questions. I know that there may be 1 or 2 questions that are coming through from the delegates to the seminar. So what I'd like to do now is defer to Teresa Clark, who has been moderating some of those questions, and she can raise them on our behalf.
Thank you, Lerato. One of the questions that has come from Pam Reeve is, what are the networking search firm or board-ready boot camps or other supporting activities to bring more women into boards in Africa? Anyone want to address that one?
I know that there's quite a few, I'm going to have to say micro-level initiatives around, and I'm not going to even say South Africa because I don't know anything outside of Joburg happening, but I have personally, for example, addressed such small gatherings, invite 12 people, 20 people, put them through their paces over a number of days, invite seasoned board members to come and address them about how do they approach their first time out on a board. But we don't have the same kind of formal structure, I think, that Susan represents in the US here at all that I know about. And I have to say it was essentially to try and bring in the youth factor onto our boards, because our boards, simply put, the average age is 60, and meantime South Africa's average societal age is under 25. Therein lies the mismatch in trying to make decisions that are fit for purpose for that society. But I don't believe that in our market there is a systematic way of doing this piece of work, and perhaps this is an entrepreneurial opportunity for someone who loves this kind of work.
Yaku, I wanted to mention, we do have a number of chapters in Africa of women serving on boards, and we can get you some more information on that. We have 2 major chapters in New York and LA called Board Next, which is board preparation. And as a part of our longer term strategy, we are looking to take that to scale globally. So I just wanted to, Teresa, do a little shout out on some of the work that you and our New York chapter members do.
Another question that has come up is, so at the end of the day, and this is a question for the 2 heads of the stock exchanges, the chair of Johannesburg Stock Exchange and the chief executive of the Nigerian, soft targets or listing requirements, which one does it take?
I think in my remarks, I did mention that we have essentially opted for an outcomes-based approach. And so this is, we're driving towards an outcome of parity. We know there's going to be steps along that way, and we want people to be quite transparent as they gradually move. So we have essentially gone the soft targets route. And the reason for that is quite simply that, and Temi actually spoke about this is why I wanted him to say something about it. It is the fact that an exchange is also a company that needs to look after its own financial sustainability, and your financial sustainability greatly depends on having a strong market participation so that people don't feel overburdened with rules. So to the extent that you can achieve the outcomes you are seeking through a softer target, it would be hard for us to square up why we would go with a hard-coded quota. I think if we were still struggling to even breach, I don't know, some unreasonable number like 20-25% after this time, it would have to be time to start thinking of stronger actions such as a target. But we feel we are making progress on the softer targets, and in my mind, what I've learned from ESG, and particularly the climate element of it, is if you can incentivize the investor base that essentially are the ones that buy and trade stocks to start getting excited about a thing, it's amazing what you can achieve. Who could have thought that we were sitting here today and without us actually mandating TCFD is effectively becoming a standard today, and exchanges are kind of coming from behind to catch up. So I think rather than hard-coded quotas, in our case, particularly in South Africa, because we haven't had opposition to this, we just have had slow progress. It's how we can get investors to see the gender lens in a similar way or in as serious a fashion as they have reacted to climate. And you could argue, even with climate, it took them a long, long time. But the biggest difference between that particular topic and the gender one is that in the climate case, it's been couched as a risk, which of course it is. It says, as you invest in this company that mines coal, do you know the risk that you're taking on board from a climate perspective? And that essentially ultimately caught the imagination, attention of people. How we sell the gender side is, Temi just said it, you will gain because a diverse board will have better outcomes financially. Well, what we now know about behavioral economics is that human beings have far more sensitivity to the pain of loss rather than to the pleasure of gain. So how can we turn the narrative to investors so that they start to push issuers on this case, and therefore you then have this pincer movement where the exchange does some and the investor base does some. And so just finally, you have to actually be right for the environment in which you are.
Let me add to that very quickly. There was this California law, it's quite popular at the time in 2018, mandating, I guess, that there should be at least one female board member in any company that's based in California. This law was praised at the time because just on the face of it, it's in line with what is the right thing to do. But then a year later, PwC ran a survey, and what they found, 83% of directors and over 50% of the female ones ultimately thought that was not a very good idea. For some obvious reasons, like, what if there's a shortage of good female directors in California? That ultimately has a knock-on effect, perhaps, around broader governance issues on these companies. But also some of the points that I think Nico just made around really behavioral science and how best to get things like this done. So certainly, I think the softer approach is what works. People would always, I think, bow to superior arguments. And indeed, as we said earlier, as more and more data shows that this is the right thing to do, we've seen this around everything SDG today. If you look across the investment community, a lot of the talk now is on sustainability, not because there's some hard rules around it, but just because it's the right thing to do. But I think it has higher chances of ultimately sticking.
Well, I think we are just slightly over time. We're not going to run on Africa time too much today, so we're going to cut this short. I want to thank you for what I think was just an amazing conversation, to be able to have in one place the head of the Nigerian Stock Exchange, the chair of the Johannesburg Stock Exchange, the partner from McKinsey who's done work on these women, the US perspective from Women Corporate Directors, all moderated by a BBC journalist. I just think that this topic has been addressed especially well. We'd like to thank all of the panelists and moderator, and especially our thought leadership, Standard Bank, who helped put this together. Didn't just write a check, but they invited several of you to be a part of this, and we thank you for that.